Welcome to the daily stock review of GATX Corporation. Goal of this channel is to uncover the world's best stocks that have 100x potential by reviewing 1,000 stocks in 12 months. If that sounds good, subscribe to come along for the journey. Now, I'm an individual investor on the journey myself. I'm 2,500 hours in over the last 7 years, and I'm sharing the lessons along the way. Here's my investing process. Today we'll look over how I came across this stock and then perform our 5-minute check to see if it's worth looking into further. These are the investors that I've learned off. They've done pretty well for themselves over many decades. So by following in the breadcrumbs that they've left behind, we'll try to follow in their footsteps and achieve that success. Let's get cracked into it. So GATX. Now, I came across this stock by looking at a couple of other rail businesses and looked at a few competitors, and then it also came across some other stocks that are around the rail space. So GATX actually lease out and provide the cars that get towed around and transport the goods. So they lease those back to the rail freight and logistics companies that move those around and then receive income from those, as well as a couple other bits and pieces. That's how I came across it. Now what I'm looking for now is the business mastered its customer? Does it have consistent or growing revenues? Does it have really good margins? That would indicate it's got a good moat around the business, so a strong competitive advantage. And what else are we looking for? We also want management. So by looking at the cash flow statement, we can have a picture of if management's being rational with how it's spending the company's money. So first of all, let's have a look at our income statement. So from 23 to 24 to 25, the lease revenue, let's just have a look at total revenues. Total revenues increased from 1.4 billion to 1.6 billion to 1.74 billion. So it is steadily increasing, which is a good sign. The main revenue from the business doesn't come from marine or non-dedicated engine revenue. It comes from the lease part of the business. So leasing those rail cars and from engine leasing. So providing the actual trains that pull the equipment or pull the trains along. So what else we got? Is there anything else interesting that's hidden away in here? Selling, general and admin. We've got total expenses 1.2. What are we left with? It's not a breakdown, but 1.7 minus 1.2, we're left with $500 million. Nice. And that's been fairly consistent. Actually looks like that's increasing a bit. So they've gone from around 400 million, 450, and then up to about 550. So that's good to see. So their cost base isn't growing as quickly as their revenue. So revenues or sales is outpacing that. So that can usually be a good sign that they're increasing the margin of the business. Now let's have a look elsewhere. What do we got? Where's our net income at the end of the day? So they've got 259, 284, and then 333. So that's nice. Let's have a look at the balance sheet. We just want to see if there's anything we don't want to see here. So what do we got? We got this. We got restricted cash, operating assets and facilities, less allowance for depreciation, and they're left with 11 billion. So it's gone up about $1 billion over a 12-month period. Where have we got total assets? Total assets comes to 18 billion. So where's our main growth here? What's going on? It is that restricted cash item. Otherwise, it would be fairly consistent by the look of it. What are our total liabilities? We've got recourse debt as a main line item here. And that is pretty much it. Now, what else is going on in the background? So, addition, retained earnings, treasury stock at. All right, and total liabilities and equity. So, in our notes to financial statements and through the rest of the report, it would explain what this one-off line item here is. But for now, let's just go and jump into the cash flow statement. Now we've got our income. That's from the bottom line of the income statement. That comes out and then they do these adjustments. So we just want to look out for anything that is out of the ordinary. Now, we can see here that our cash in the business is increasing as we'd anticipated based on the costs of the business growing, but not as quick as the revenue increase. So 520, 602, and 648. So a cheeky $500 million. And portfolio investments and capital additions. So they're spending significantly on that. But where's that money coming from? If they're only making $500 million and they're spending 1.3, near 1.6, it's a bit over double that. So you've got to be getting the cash flow from somewhere. So net cash used in investing activities, haven't there. Net proceeds from issuances of debt with original maturities longer than 90 days. So 1.4 billion, 1.2 and 4.8 billion. So they've bought some debt to finance that part of the business. And what repayments have they made? They've repaid part of that with some of that as well. Now, GATX equity contribution from non-controlling interest. All right, so there's a little bit going on here. It's not just one item. You can see that we've got growth in net proceeds from debt issuances of debt. So we've seen that debt has increased. And we've got our 4.841, which ordinarily looks pretty close to our restricted cash. It being around the same value of $4 billion. Net cash provided by operating activities or financing activities. Where am I going? All right. So the debt on the business is increasing. They've held that cash over. Effectively, it's kind of sitting in the assets column at this stage. So we need to, if we wanted to have a look in this business further, we want to read up on what's actually going on with this. Here it's classified as, and looking at debt, then we've got this magical line item that pops out at 4 billion in restricted cash in the assets section. GABX equity contribution from a non-controlling interest. So we'd want to have a look up where this $900 million has come from. And cash equivalents at the end of the day comes out there. So it's increased a fair bit, but majority of it's come from this debt, and it's obviously going to be for a purpose. Now, what has the business been doing in terms of repurchases? It spent a little bit on repurchases, but it also spends a little bit of that money on dividends. So the business appears to be going through a growth phase, but how is it financing that growth? It's actually financing it through debt at this stage. So it only makes a bit over $500 million in cash from its operating activities. That's the main source of income for the business. And then what is it choosing to do with that money? It's choosing to roll the dice and double it, everything on red, with investing or getting some additional debt to have or fuel those investments. So that's part of a business that we want to keep a closer eye on. Now, is there anything in the balance sheet? It only shows the last 2 years. So it can be a bit tricky to be able to see that. So other liabilities, total liabilities here, we can see that that's increasing as well. And considering our total assets here, it may be that they just restricted cash is the debt that they got. They haven't actually put it to work yet. And so they've got that $4.5 billion sitting there. They're committed to it. They're going to use it for something, but it hasn't actually turned into a long-term asset that's going to make money for the business at this stage. So really, it's going to depend a lot on the business. Are they going to get $1 of value or more for every dollar of cash that they put back into it? And financing it with debt is a risky move. It's more risky than just fueling it at its current pace of cash that it was generating. So we need to make sure that these guys and the management team know what they're doing. So we'd want to have a closer look at how they are, what are their interests in this business going forward. Do they have a high amount of skin in the game or not? So this business could be an interesting look. Now, it looks like with that steady increase in revenue over the last few years that has been recognized by the marketplace. And over the last 5 years, I guess it's almost doubled in price, and has at some times as well. You can see with the actual price of the stock fluctuating a bit, considering this has been rising steadily for the last 3 years. You know, you can picture putting a line straight through it, and you can see that over time, the marketplace usually gets it pretty close to right in terms of what the underlying value for the business is. You can see there's definitely been times that you could have bought above or below, I guess, the average of the line through that. So that just gives you a quick understanding of, how that's sitting. Does this business look like it could be an opportunity to look into? Definitely, it really depends on what they're going to do with that cash. If we think that management are capable enough of executing on that vision, it can potentially be a catalyst for a great bit of growth within the business that may not have been priced in by the market at this stage. Now, is it something that I want to have a look at this stage? Probably not. It may be that they're going to be doing an acquisition and they've just been loaded up with debt that they're then going to have to pay off. So it may be one to keep an eye on, but it doesn't really fit my key rationale of finding the greatest businesses on the planet. Definitely an interesting business though. All right, I hope you liked it. If you got any questions, comments, or you got a different take on it, feel free to drop them in the comments below. I'll get to reviewing them in a future video. And if you liked this, you'll probably like this next video because YouTube reckons you'll like it. Cheers.